Well, let's digest all of what's happened today in the markets with our market panel. Let's bring in Eddie Ghabour, Key Advisors Group and author of The Common Sense Bull, and Joe Farmi, Zor Capital's Managing Director. Thank you both for joining us.
Eddie, I want to bring you in here. You said in your notes to us that this is the most cautious and concerned you've been in your career. Why is now so exceptionally concerning, and what does that mean for how you've been investing?
So look, I think we have to look at where we came from. We saw one of the fastest increases in bubbles last year due to what the Fed did, due to loose monetary policy. And we saw the economy really accelerate at a historic rate. And now the setup coming into this year, which is why we became very cautious at the beginning of November, is literally the complete opposite. So these bubbles are going to have to come unwound. We are going through a deleveraging process right now. And so I'm very concerned because I believe a lot of investors did not make moves. They think that maybe because their stock is down 20%, that it can't go down another 20. And that's very concerning to me because the bottom line is I believe we are now in a bear market. It's going to trade like a bear market. We have the economy decelerating at a very fast rate due to the inflationary pressure. When you put the Fed tightening on top of all of that, I don't see how these risk assets can't go down another 10 to 20%. So we have raised cash. We've gotten completely in our tactical strategy where we risk manage for our clients around their core holdings. We got out of technology. We got out of small caps. We have a good cash position. We've been buying precious metals, bonds. We've been buying bond proxies on dips. So we are playing it very safe. Because again, we are in a historic time period right now. And then you put a war on top of all that. There just aren't a lot of reasons to be bullish right now, unfortunately.
Eddie, you're bearish on stocks. How bearish are you on the economy? And do we get a recession in the near term?
I do. I think right now, when we take a look at this data as it comes in each week, and inflation coming even hotter than what we were anticipating, that I believe next year we're going to be looking at a recession. Now, what that means, in my opinion, is the market will bottom before it's a technical recession. So I think we could have some amazing buying opportunities in the fourth quarter of this year. But I think right now for investors, patience is really hard to do because cash burns a hole in their pocket. But I think being patient here and letting things play out, because I can tell you right now, if the Fed really does raise rates 4 to 6 times, like many people are predicting, this thing can get very ugly very fast. And that's when you have bubbles burst. That's when you have the VIX in the 40s. And that's when the bearish sentiment matches the selling. Because again, I agree. It is not bearish enough in regards to when you look at how people are positioned. So we need to get that capitulation first before I'm willing to jump back in with our client assets into those high risk and high beta plays.
And Eddie, if you're an investor who bought the dip early, perhaps didn't rotate late last year, how would you recommend minimizing the damage to your portfolio now?
So look, everyone's situation is different, of course, but it's not too late to reassess. I mean, look, the S&P is only down, 10 or 11%? In my opinion, we're not going to get off that easy. So don't just sit there and watch your portfolio go down and down and down, because then mathematically it's going to take you years to get back. It's okay to sell losses as long as they're manageable losses. So from an investor's perspective, when you have big bounces, because in bear markets, you do get some pretty sizable rallies, I would look at that as an opportunity to reassess your risk. And at that time, maybe take some off the table if you're not happy with the portfolio performance, because I believe the second quarter is going to be worse than what we've just witnessed because the economic data coming in is just not going to be good. I think, look, most people are talking about a 4% GDP growth in the second quarter. I don't see how there's any way we come even close to that. And if that's a surprise to the market while the Fed is tightening, I think people will wish they would have sold earlier.
You've got lots of good advice there. Thank you so much to our panel, Eddie Ghabour from Key Advisors Group and author of Common Sense Bull, and Joe Farmi, Zor Capital's Managing Director. Thank you for your time today.